House prices rose in every capital city across the country in May as the rebound in the mortgage market gathers steam. The ASX tumbles as inflation figures hint at another rate rise, and Reserve Bank Governor Phil Lowe warns that the rental market may get even tougher. It's Thursday, the 1st of June, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, tell me, you've got the chat today.
Yeah, I can never accuse you, Sean, of being driven by self-interest because today's interview is largely driven by my own self-interest, but it's self-interest for a good cause. We're speaking to Mike Wilson, OAM, who is the Chief Executive of JDRF Australia, which is essentially an advocacy body that's representing people with type 1 diabetes, which is something that affects our family. And so we talked about that organisation delivered a masterclass in political advocacy last year, kind of securing a commitment from both sides of politics before the federal election in kind of guaranteeing funding for some technology that would change the lives of people with type 1 diabetes. And we talked to Mike about kind of how they managed to do that. And it is really quite an impressive story. But also it is today the JDRF Giving Day, where every donation that is made to JDRF today is matched dollar for dollar. And that is the real kind of reason for the conversation today.
So where do I go? If I want to give to JDRF, where do I go?
You go to jdrf.org.au and it is, matched dollar for dollar, all the way up to $1 million.
Well, now you're talking my language.
Should you have a spare mil that you want to toss in, it will be matched dollar for dollar because of some extraordinarily generous kind of sponsors and partners of the organisation. So it is a fantastic day to really kind of drive that donation dollar even further. And look, it was a really good kind of chat with Mike about the impact that it has, that type 1 diabetes has on families, because it really does affect mostly, it comes on in children, really. And that's what happened in our household when our son was 2.5. And the conversation goes through all of that. And so it's worth a listen. It's worth sticking around for, but I've talked enough about it now, Sean. A quick plug before we go on for our Instagram as well. Jump on there. We've been really kind of busy on the social media this week, and we've got a bit of a video up there now as well that explores our road trip last week.
Oh, you didn't? Really?
Yeah.
Oh, dear.
I did some candid shots I took of you, Sean. So it's worth checking out Fear and Greed podcast on Instagram. You'll see that video up there now. But the main story this morning, Sean, house prices across capital cities jumped by 1.2% during May, with Sydney prices now up nearly 5% since their lows and Melbourne up nearly 2%.
The housing market has turned, no doubt about it. Whether it can keep going and not reverse is still an open question, though. It was the third consecutive monthly rise from CoreLogic's National Home Value Index, and the acceleration is much faster than March and April. Last month, Sydney prices led the way, up 1.8%. Now, that's the highest monthly gain since September 2021. The median dwelling in that city is now up nearly $50,000 since the January lows. Brisbane prices last month jumped 1.4%, while Perth homes rose in value by 1.3%. While they were the only other capital cities to rise by more than 1%, the price of homes in every single capital city increased. Quite remarkable. Regional prices also rose for the third consecutive month, though at 0.5%. That's not quite the same pace as the capital cities. Perth is the only capital city now where dwelling values have returned to record highs. Hobart values remain nearly 13% below their peaks. In Melbourne, the drop from peak to now is 8%. In Brisbane, it's 9%. And in Sydney, it's 10%. So while Sydney's doing very well, still has a ways to go.
Double-barreled question for you, Sean. One kind of looking back, one looking forward. Why has this happened? And will it continue?
Yeah, great questions. Low levels of housing supply and strong levels of demand, not least because of increased immigration, are pushing prices higher. For this time of the year, inventories are 15% lower than they were last year. They're 24% lower than long-term average. So we have more migrants and people looking for homes, fewer houses out there. Also, there's a bit of FOMO going on, and auction clearance rates are strong, so that's encouraging people who fear about missing out. Much harder question, though, about whether it will continue. House prices won't keep growing at plus 1% per month. That's just ridiculous. And if we get another rate rise next week, which is looking increasingly likely, then that could curtail growth. But there's plenty of other factors to throw into the mix. Housing supply and immigration, I just mentioned, they're the two big ones. I don't think anyone can confidently say what's going to happen to the market, Michael.
Sean, there's so much in this and so much to kind of dive into. I think it's probably worth talking to Tim Lawless from CoreLogic tomorrow.
We should. Yeah.
About this, because he always just does such a great job of explaining that not just what is happening, but the logic behind it, if there is in fact logic behind it at all. So we might tee that one up for tomorrow. So obviously big day kind of for the housing market, big day as well for the equity market yesterday.
Sure was. The S&P ASX 200 tumbled 1.6%. down to 7,091 points. Now, that's back to late March levels and only just above where the bourse started the year. Weak economic data out of China and surprisingly strong inflation figures, both of which I'll talk about in a moment, weighed heavily on stocks. The China data hit the big iron ore miners hard. They, of course, export to China. Now, BHP was down 3.4%, Fortescue Metals was off 3%, and Rio was down 2%. But it was pretty widespread. Commonwealth Bank, Westpac and ANZ all fell around 2%. Wesfarmers was off 3.3%. The energy sector did worst, while materials and financials weren't far behind. Only tech stocks ended in the black, and only just. It's a rough day for the coal miners in particular after the price of the sedimentary rock fell sharply on Tuesday. Whitehaven was the worst for the top 200 yesterday, down nearly 6%. New Hope was off more than 4%. Just a very, very rough day with about 3/4 of the top 200 dropping, Michael. I'd say a proverbial sea of red.
Oh, you and your seas of red. I have never heard coal described as the sedimentary rock before, but I mean, geologically, it's accurate.
It is. So I had to check out, I didn't want to use the word coal twice in the same sentence, which is a real journalism trick. And so I was trying to find a descriptor for coal. And I mean, I'm sure there's lots of better ones, but it's actually a sedimentary rock. I wasn't sure whether it was a metal or not. It's not. It's a sedimentary rock.
Okay, well, I mean, you talked about this before, that one of the greatest challenges in your journalistic career is trying to find enough different ways to describe the same thing. And so now you've used sedimentary rock to describe coal.
I think I'll try something else next time.
Yeah, please. You mentioned the monthly inflation figures. What happened? Yesterday was such a massive day, wasn't it?
So much going on. Basically, the monthly inflation figures weren't encouraging for those of us, most of us, hoping that the heat has come out of price rises. Annual inflation hit 6.8% for the 12 months to the end of April, up from 6.3% a month earlier and well above expectations. Without the volatile items, it came in at 6.5%. Now, the high number is partly because 12 months ago, the figure was low after the fuel excise was halved. That flowed through to this month, so we expected it to be high. But still, housing, food and non-alcoholic beverages, transport, recreation, culture prices all rose really sharply. The good news is the trend for inflation is down. The bad news is it's still way too high, with rising wages sure to keep pressure on prices. Bond markets, who I would say are the best predictors of inflation, have now priced in another 25 basis point rise next week. Not something to look forward to.
No, why are they such a good predictor of rate rises?
Well, I think it's because they're actually put their money where their mouth is. So we can talk about what's going to happen, but these guys are investing money, and so they're pretty serious about it.
Okay. And finally, you mentioned the Chinese data before. What was that all about?
Well, Chinese manufacturing activity shrunk for the second straight month in May. That didn't help the iron ore miners, nor did it help the Aussie dollar, which yesterday fell below 65 US cents. Oil prices also fell. The bottom line for commodity prices at the moment is that worries about the global economic recovery, particularly in China and the USA, are weighing down on prices. And that's also weighing on the Aussie dollar.
Okay, there is so much going on. We'll be back in a moment with the rest of the day's business news. Sean, Reserve Bank Governor Philip Lowe was in front of Senate estimates yesterday, and the discussion seemed to range well beyond economics, with the central bank boss saying that PwC won't be doing work for the central bank anytime soon.
Yes, now Phil Lowe mostly sticks to his knitting when it comes to public commentary, but yesterday he was more broad-reaching. If he doesn't get reappointed in September, which I think it's unlikely that he'll get reappointed, then yesterday was his last Senate estimates hearing, so why not go off with a bang? We'll start with the economics, though. Lowe said inflation in the labour-intensive services sector is proving persistent because low productivity and high wages growth are driving up unit labour costs. He said productivity is key to how a nation becomes wealthier. Well, that's fine, but really you boil that down, that sounds like he's thinking about another rate hike. He also said he expects rent inflation to reach close to 10%. Now, that would be the highest rate since 1989. It's going to stay elevated for some time, mostly due to the lack of supply. And we talked about that in the top story. While the population is increasing by 2%, the housing stock is definitely not. The Reserve Bank governor also came out and said part of the reason it's not is because of all the regulations around housing. He didn't quite say he didn't like those regulations, but that was definitely the inference.
Sean, working in radio, one of the best things whenever you had a guest on was that obviously answer all the questions relating to, say, their portfolio if it was a politician, but you'd often get the best headlines when they did kind of veer off course slightly and start going into other areas where you wouldn't normally hear their opinions. So what did he say away from the economy?
There's plenty in it. Moving on to mortgage holders, the bank's figures suggest that about 15% of variable rate owner-occupier borrowers are likely to have negative spare cash flow by the end of the year. Basically, that means they're going to struggle to repay their home loans by the end of the year unless they pull back on consumption. When Lowe was asked about spending in the recent federal budget, he said that the extra money in the budget was at the margin expansionary, but it didn't affect the interest rate outlook. And on PricewaterhouseCoopers, which a bunch of bureaucrats were asked about yesterday, all those in Senate estimates meetings, Lowe said he didn't want to work with any organisation that doesn't meet rigorous integrity standards, i.e. PwC ain't getting a gig at the Reserve Bank anytime soon.
Yeah, there were more revelations in the whole PwC scandal with the tax commissioner, one of those bureaucrats that you mentioned, telling estimates that the consulting firm was behind 15 schemes designed to help multinationals sidestep tax laws.
And of course, at the heart of this scandal is the fact that PwC, having signed a confidentiality agreement, worked with the government to design laws to capture more tax from multinationals. Tax Commissioner Chris Jordan said PwC put at risk about $180 million in tax revenue a year because it used the confidential information it gained to advise clients. He also accused PwC of frustrating the tax office in its investigations into the schemes. A fair whack by the tax commissioner.
I reckon that's the best kind of summary then, Sean, of why this is so problematic. The fact that they helped design the laws to capture more tax and then use that information to help them sidestep the same laws that were just designed. It's such a simple kind of way of looking at it. And you just hear that and go, oh, that is not good.
Yeah, that's in a nutshell, that's what it is.
Now, Sean, the banking and superannuation watchdog, APRA, said it was being more active to ensure funds accurately reflect the value of their assets, including those unlisted assets.
Yeah, this is very important. So a super fund might own an office tower, but it's not as worth as much today as it was a couple of years ago. And so the value of that on its balance sheet should be lower, but it's not always because it's hard to revalue some of these things. The Australian Prudential Regulation Authority wants to make sure super funds' balance sheets reflect the proper value of their assets. Speaking at Senate estimates, APRA also said it is formally investigating industry super funds payments to unions and whether these are in members' best financial interests. Very good question, that. Funds payments to unions can flow through those unions to political donations to Labor or related political groups, and that's under the microscope. Chair John Lonsdale said he has no plans to hire PwC again, and it will consider ethical concerns in any contracting decisions in the future. And he defended the regulator's 3% serviceability buffer for new home loans. That's the fact that when you get a loan, if you have to pay 6%, the bank looks and says, can you repay 9%? That serviceability buffer being that 3%. He said it's basically a safeguard against higher interest rates.
Sean, Parliament was busy yesterday between question time, Senate estimates, and normal business. One bill that passed through the House of Reps was the Constitutional Amendments Bill establishing the Voice to Parliament referendum.
Well worth marking. I think it's a first step in the process, and while the Nationals and a handful of Liberal MPs opposed the bill, it passed easily with 121 votes for and 25 against. We found out plenty of stuff yesterday. For example, Australia has rebuffed requests to supply Ukraine with Hawkeye vehicles because of a braking issue. That's according to defence officials. And in something of a bombshell later in the day, Chief of the Defence Force Angus Campbell said the US government warned allegations of war crimes against Australian soldiers in Afghanistan could prevent the country's armed forces working with Australia's SAS, the Special Air Service. So the March 2021 letter warned the Brereton report, which detailed credible information that Australian soldiers had unlawfully killed 39 Afghan prisoners and civilians, could trigger a US law that prevents the country's military working with units linked to gross violations of human rights.
And as well, the free trade agreement between Australia and the United Kingdom kicked in yesterday.
About $4 billion of tariffs on imports have been dropped, which should flow through to consumers, hopefully in lower prices. And 99% of Australian exports to the UK are now duty-free. Assistant Minister for Trade, Tim Ayres, said Australian producers of agricultural goods, wine, meat, grains, dairy, stuff like that, would benefit from an increase in duty-free quotas or the removal of tariffs. And just quickly before we leave politics, we better mention that Western Australia has a new premier. The deputy to outgoing Mark McGowan has been confirmed by the Labor Party as the new leader. His name is Roger Cook, and his deputy will be Rita Saffioti. She's the current Transport Minister.
Sean, moving away now from politics, Bank of Queensland has been hit with enforceable undertakings by two regulators for failing to have sufficient anti-money laundering and risk management controls in place.
The announcement came just 6 months after the bank said it wasn't being watched by regulators. One undertaking comes from the banking oversight agency APRA and the other from financial crimes watchdog AUSTRAC. APRA will also require Bank of Queensland to hold $50 million in extra capital from this month as part of the deal. Now, Bank of Queensland has several breaches of APRA's prudential standards over the past 18 months. That is a massive no-no in the banking world to breach those prudential standards. APRA said the bank has acknowledged its past risk management and risk culture weaknesses. Bank of Queensland's share price fell nearly 5% yesterday after the news came out.
All right, finally, Sean, before we get to international news, an Australian garlic variety may be a preventative measure against COVID-19 and the common flu.
The research released by the Peter Doherty Institute shows that a certain Australian-grown garlic variety demonstrates antiviral properties with up to 99.9% efficacy against the viruses which cause COVID-19 and the common flu. According to the Financial Review, the research, which was commissioned by the Australian Garlic Producers Organisation, used garlic ingredients extracted from exclusive Australian varieties. They're now being commercialised and will be able to be taken as a soft capsule supplement, something like vitamin C or a fish oil tablet, I think. They're also subject to a recently lodged international patent. But there you go, garlic for a long time has supposedly had medicinal purposes. I think heart mostly. Anyway, sounds like the COVID-19 and the common flu could be good for them as well.
There you go. International news now, Sean, and Chipmaker Nvidia Corporation's market valuation yesterday, major day, breached the $1 trillion threshold, becoming just the fifth company to do so.
The stock rose as much as 8% in Tuesday night session on Wall Street, pushing Nvidia into that $1 trillion territory. It then fell back on the close to actually close below that. Now, only 4 other companies, Alphabet, Amazon, Apple, and Microsoft, have trillion-dollar valuations. Fewer than 10 companies globally have achieved the distinction, according to a report on Bloomberg. As we have mentioned a bit here, Nvidia is riding the artificial intelligence obsession. It's the world's biggest maker of the specialized chips needed to power a new generation of AI products. This is happening, of course, just as the viral success of ChatGPT. That's pretty much every company around the world thinking about AI. Nvidia is the big winner.
Yeah, it's a cracker of a story, that one. And one more, Sean, the former boss of disgraced biotech group Theranos, Elizabeth Holmes, has spent the last 24 hours in jail. That's the first day of an 11-year sentence for overseeing a notorious blood testing hoax.
It has been an amazing story, this one. Holmes, 39, was convicted of fraud last year for duping investors, including News Corp's Rupert Murdoch and Oracle co-founder Larry Ellison, who contributed hundreds of millions of dollars in the failed Silicon Valley startup. Now, Holmes and Ramesh Balwani, who's serving a near 13-year prison sentence, claimed that Theranos had developed a device that could quickly scan for diseases and other medical conditions with just a few drops of blood. But the technology never worked as advertised, leading to the downfall of the company that at one point was supposed to revolutionise healthcare. That's according to Associated Press. Anyway, Elizabeth Holmes is now in jail. And Michael, before we finish up, I have to apologise. So much going on today. I do have a great, unusual story. We've been having them all week, but we're going to have to hold off till tomorrow. Just time limits us.
I think that's fair enough because it has been a massive 24 hours in news. So you'll just have to deliver an extra unusual story, which is going to, I mean, you've had some crackers so far this week. So I look forward to seeing what you bust out for us tomorrow.
Good. I'll bust something out good.
Okay, well, on that note, up next is the Fear and Greed Daily Interview, and today we are speaking with Mike Wilson, OAM, the Chief Executive of JDRF Australia. It's basically all about type 1 diabetes, why a donation today is worth double, and what it means to the lives of 130,000 people around Australia that have the condition, and the 8 additional people that are diagnosed every single day. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And if you want to get involved, jdrf.org.au. And Sean, we've also been promising for days now a Mia, a most enthusiastic advocate. And we have got them kind of coming out the
proverbial,
yes. Thank you. You've saved me from embarrassing myself there. But lots of people getting in touch with us via social media, including our Instagram. So jump on there, Fear and Greed Podcast. But this one from Brad, who wrote to us on LinkedIn, said, congratulations, Sean and Michael, on reaching 3 years. You are my go-to, and I look forward to my morning and afternoon updates. P.S. Loved your book too, Michael.
Oh.
And he finished with keep it up. And so I don't know whether he's referring to kind of keep up the podcast or keep up the books.
You got to write another book or something? Yeah.
You know what? We'll do it all.
Yep.
Thank you, Brad. You're our Mia, our most enthusiastic advocate for today. And please keep those nominations. Self-nominations are more than welcome. Thank you very much, Sean.
Thanks, Michael.
It's Thursday, the 1st of June, 2023, the first day of winter. Make sure you're following the podcast. Join us online, as I mentioned, on LinkedIn, on Instagram. Check out that video, Twitter and Facebook, and stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can get yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.